In today's video I want to talk to you about the flagship technique encountered in the fractal flow methodology that I currently teach, and how it can be used as an objective trigger for a trade. Many people worry about subjective analysis with the fear that they will not find any end to the analysis itself, and they will not have an external objective tool to open trades with a certain degree of safety. That's the problem that I attempt to solve with the idea of the fractal candle. In this video I will briefly show you one type of entry you can do with the fractal candle, and then I will talk a little bit about what a fractal candle means and some of the ideas that are attached to it. I will not get into too much detail about the other contextual elements that led to the validation of this fractal candle as a trigger point, but roughly speaking, we have a few different elements agreeing about the same market logic in this live trade example. In general terms, we have lower highs and lower lows in the large fractal, meaning that we have the notion of a downtrend in what appears to be the framework on which more significant buyers and sellers are playing. That's important because if you look at the smaller fractals, you will find a lot of higher highs and higher lows. If you fail to make the distinction between who's more powerful in the hierarchy of major and minor flows, you will start your analysis in the wrong way. Beyond the vague notion of downtrend in this chart, we have price action coming out of a tail frequency-generated supply zone. A supply zone, as the name clearly suggests, is a zone out of which people want to sell. The fact that it is a frequency tail-generated supply zone refers to the fact that this zone has an upper and lower limit that comes out of specific points in the chart. They are marked by the short downward sloping black line near the third blue square in the chart. Observe that this short sloping line connects the upper tails of the last confirmed market structure in an angle that captures what those upper tails have in common, but that's a story for another course. What I want you to notice is that the trade you see in this chart was triggered in the open value of the candle right after the fractal candle marked by the green arrow. This fractal candle also happens to be inside a simple reversal divergence marked by the relative strength index. You might be wondering what a fractal candle is, and that's the idea that I want you to understand in this video. Roughly speaking, a fractal candle is a pragmatic price action element that ironically comes out of the study of momentum asymmetries between timeframes. In other words, it's a way of combining the multi-timeframe trading principle with fractal analysis and momentum analysis. You cannot understand what a fractal candle is without understanding the advanced types of divergence that we deal with in the fractal flow method first. You cannot understand the advanced types of divergences and momentum asymmetries without understanding simple divergences and fractal analysis first. You cannot understand fractal analysis without understanding some basic ideas about chaos theory first. And at last, you cannot apply fractal candles correctly without understanding the 6 dimensions of a professional trading strategy first. As you can see, there is a lot more than what meets the eye here, and that's why explaining what a fractal candle is and how to use it is outside the scope of these short YouTube videos. I can only explain what it is in general terms, and I can certainly show you its power with these live trade explanations. Let me jump forward in time so you can see how the fractal candle pointed out a precise moment to sell this market. As you can see, the fractal candle used to trigger the short position you saw in this video pointed out a rather precise reversal in the market. This is what happens when you combine advanced principles in a very particular way to understand the market. Let me sum up once again a low-resolution representation of the things involved in the fractal candle principle. Fractal candles are immediately attached to the idea of advanced types of divergence studied in the fractal flow method, which are the fractal reversal and the fractal hybrid divergences that vary within 2 and 3 different degrees. These types of divergences cannot be understood without knowing the simple types of divergence combined with the fractal analysis of momentum and market vectors. Fractal analysis cannot be understood without a good idea of simple principles that are found in chaos theory, and at last, fractal candles cannot be properly applied without the 6 dimensions of a professional strategy to filter out the naturally produced bad signals. For those of you who worry about subjective analysis too much, please know that in the fractal flow method there are very good antidotes to the rather uncomfortable feeling generated by subjectivity. The fractal candle is the technical antidote to that, and risk management is the behavioral antidote to subjectivity. If you liked the video, don't forget to click the like button, subscribe to the channel, and leave your feedback in the comment section. Thank you for watching.